Greetings, fellow learners, and welcome back to our financial education channel. Today, we're delving into a topic that's at the core of successful investing: risk management. Whether you're a seasoned investor or just starting out, understanding how to identify, assess, and mitigate risks is crucial for safeguarding your hard-earned money. In this in-depth video, we'll guide you through the world of risk management, its various types, strategies, and real-world applications. So, let's dive into the art of protecting your investments. The essence of risk management. Risk is an inherent part of investing. Risk management is the systematic process of identifying potential risks, evaluating their potential impact, and taking measures to minimize or mitigate those risks. A well-structured risk management plan is key to maintaining financial stability and achieving your investment goals. Types of investment risks. Let's explore the different types of investment risks you may encounter. Market risk. The risk of losing money due to market fluctuations. Interest rate risk. Changes in interest rates that affect bond and fixed income investments. Credit risk. The risk that the issuer of a bond or debt instrument may default on payments. Liquidity risk. Difficulty selling an investment quickly without significant loss. Inflation risk. The reduction in purchasing power due to rising inflation. Currency risk. Fluctuations in foreign exchange rates impacting investments in other currencies. Business risk. Company-specific factors affecting stock performance. Political and regulatory risk. Changes in laws or government policies affecting investments. Systemic risk. Risks that affect the entire financial system, like financial crises. Importance of risk assessment. Conducting a thorough risk assessment is crucial before making investment decisions. Understand your risk tolerance, investment goals, and time horizon. This assessment will guide your risk management strategies. Risk management strategies. Effective risk management involves various strategies to minimize potential losses. Diversification. Spreading investments across different asset classes and sectors. Asset allocation. Determining the right mix of assets based on your risk tolerance and goals. Hedging. Using financial instruments to offset potential losses. Stop-loss orders. Setting predetermined price points to automatically sell a security. Options and derivatives. Using options to protect against downside risk. Insurance. Utilizing insurance policies to mitigate certain investment risks. Research and due diligence. In-depth research before investing in companies or assets. Emergency fund. Keeping a cash reserve for unexpected expenses or downturns. Emotional and behavioral aspects. Emotional biases can cloud rational judgment in risk management. Avoid herd mentality, overconfidence, and fear-driven decisions. Staying disciplined and focused on your risk management plan is crucial. Monitoring and adjusting risk management. Risk management is an ongoing process. Regularly review your portfolio's risk exposure and performance. Adjust your strategies based on changes in your financial situation and the market environment. Real-world applications. Let's look at real-world examples of risk management in action. Explore how companies, investors, and fund managers implement risk management to navigate uncertain situations. Case study: 2008 financial crisis. We'll dive into the 2008 financial crisis, dissecting how inadequate risk management practices led to catastrophic consequences. Learn valuable lessons from this significant event. Congratulations! You've now grasped the essential concepts of risk management. Remember, successful investing involves a careful balance between risk and reward. By implementing effective risk management strategies, you're ensuring a more secure financial future. Thank you for joining us today to learn about risk management. If you found this video informative, please like, share, and subscribe to our channel for more valuable financial insights. Empower yourself with knowledge and make informed decisions to safeguard your investments. Stay tuned for our next video.